right, everybody. Welcome back to another podcast, another Reup Productions podcast. We have Tyler Cornelius on today. Tyler, how you doing, brother?
Doing well, man. Thank you guys for having me.
Yeah, thanks for being here. So I kind of want to get into how'd you get started in becoming a loan officer? What drew you to it? Yeah.
Sure. No, so studied finance at DePaul, and I've always kind of gravitated toward real estate. So it was kind of the best intersection between kind of finance and real estate was lending. So I actually originally started off in commercial lending, still do that. But I kind of gravitated and found a liking toward kind of helping kind of the average American as opposed to someone who, they're kind of more focused on growing a company instead of kind of setting up shop for them and their family.
Yeah, of course. Like it must be so much more gratifying to actually like help just a regular person rather than like a corporation.
For sure. Don't get me wrong. Commercial's great. Very interesting. I love working on, investment properties and things like that. But I do, at the end of the day, feel like I'm kind of bringing my brick to the wall of society by getting people into homes and actually educating them on kind of what the American dream looks like and kind of building up some equity and having something they can kind of pass along for the next generation.
Yeah, it's probably thankless on the commercial side.
No, yeah, done a lot of volume on that side, and I rarely get thanked. And on the residential side, sometimes people get moved to tears when they close on something that they didn't think was actually a possibility for them.
Oh, yeah, that's probably amazing.
Yeah, it sounds corny and a little bit cheesy, but like I genuinely, I remember my first loan getting closed, going in the elevator at my building, and I got the clear to close, and I was just absolutely like my stomach had this feeling in my stomach and chest of just like you're really helping people accomplish their goals.
More specific things towards the city that you see that maybe like an average person like myself doesn't really know.
Sure. So I mean, a lot of buyers, first time buyers, will come to me, and they'll do a Google search of what are the average interest rates today. And that takes a national average. And a lot of that has to do with more so single family as opposed to condos. And obviously we know the city is made up of majority of condos. So condos typically will have a higher interest rate. And so when I kind of quote them what the interest rate is, they always kind of get a little bit shocked that it's not exactly below or at that national average that they Googled. So that's always kind of some education I have to kind of let them in on that, condos are typically going to be priced a little bit higher when it comes to interest rates.
Is there like a specific reason that they are a little higher?
It's just a little bit more risk. There's typically an association tagged on with those condos that kind of run and operate. So it's not a single family home where it's just obviously you kind of managing your home and property.
Oh, okay. So the introduction of like more people within the environment like causes there to be more risk.
Right. When there's association running properties, and that leadership can change over the course of years and decades, and the way they run the property can also change.
Okay. Yeah, that's interesting. I didn't know that at all. So, as a loan officer in Chicago, what are some of the like aspects or unique aspects of loans in Chicago that like the average person might not know about?
Sure. Yeah. So I think Chicago, as we know, a lot of condos as opposed to different areas of the country and even different areas of Chicagoland. So a lot of borrowers and buyers that are coming to me, they kind of have a preconceived notion of where rates should be. I'm assuming they're going to go on Google right before our conversation and just type in, what's the average 30-year fixed mortgage rate today? Mm-hmm. And that's what they think it should be, when I'm quoting them. But actually condos are typically higher priced when it comes to the actual interest rate as opposed to a single family home. And that's something that they don't know. So they're always like, why are you priced a little bit higher? And I kind of have to educate them as to why condos, as opposed to single family or even buying townhomes, are priced higher as far as the interest rate goes.
And so why is it that they might be priced higher?
It's because condominiums have a homeowners association. So the HOA manages the building, all the common areas and everything else like that. So it is deemed a little bit riskier to have a property that's in an HOA as opposed to a single family home where you're the one keeping it up. And then, they're relying on the HOA to be the person that's keeping it up. So it is riskier.
Because it's not necessarily direct. You're directly involved, even though you kind of are with the HOA. That's interesting that they deem it more risky.
Right. Yeah. I mean, if I have my own home, I'm the one who's doing all the maintenance and making sure, it's kept up because that's my home. But
Right.
you're relying on an HOA and the board that typically do live in the building, it's just deemed a little bit riskier to be relying solely on them to make sure that, the property's kept up, all the common spaces are the way they should be.
Okay. So this kind of leads me into my next question. So what is the difference between like getting a loan from you and like potentially going to a bank like Chase or Fifth Third or whatever?
I would say for one, service. But if we aren't going to branch on that, then, we're both direct lenders. So we're both lending off of a guarantee rate. I'm lending off of our in-house line. Places like Chase, they're obviously a depository bank. So they're lending you the money that people are kind of placing with the bank.
You touched on the idea of like service. So what do you think is like the difference between the service that you get with you rather than going with like a bank or a traditional bank?
No. I always tell clients, if you're going with the lender just solely based off rate, then I may not be your guy. I typically don't get beat on rate. Typically why you're going to go with someone like me and a lender with guaranteed rate is the service. We're all fully commissioned. I always tell them, hey, ask your lender or try to figure out what's their compensation. My chair isn't spinning at 5 p.m. Like some people's are, just because of their salary and they're not really incentivized to go the extra mile. Whereas with a lender like me, a guaranteed rate, I'm all commission. So I'm not leaving until the loan is where it needs to be and, until my clients are happy. We have our own in-house processing and underwriting as well. So I have intimate relationships with the people that are actually going through your file, making sure, everything is in there correctly. All the underwriter knows what they need to know. And that way, we can actually cut down on the time it takes to close your loan.
Tyler, what are some of the more common loans that you see typically, like here in Chicago?
Yeah, no, a lot of conventional loans. If you're going specifically the city of Chicago, downtown area and the surrounding neighborhoods, a lot of conventional loans just because there are condo associations, whereas the suburbs, you might get a lot more FHA just because the condo association has to be approved by the FHA and a lot of them aren't up to date and current with it. So we have to go with conventional loans. And within conventional loans, there's a lot of different products that we can use to kind of meet the needs of all of my clients. Especially with inventory being low where it is right now, a lot of clients are out there looking for that polished turnkey home that they love and that they're kind of searching for. But since inventory is low, there's not a lot of options out there. So a lot of loans that I'm seeing that's been pretty prevalent in the last year are renovation loans. So clients are being able to go out there and find kind of a fixer-upper because they're not going to be able to find that great turnkey property. So we're able to take all of your renovation budget. Instead of you paying out of pocket for it, we can run it into the loan. And you can obviously finance that over the course of 30 years as opposed to having to pay out of pocket, as you fix the place up.
Oh, that's awesome. Is that a pro tip right there?
I would say so. It's kind of a big hack. I know a lot of buyers come to me and they're like, yeah, we like some of these properties, but they need a lot of work and it's expensive and we don't have the cash on hand to just put $30,000 into our home. And I'm like, well, you're in luck. You're in the right place. We offer renovation loans. So that $30,000 that you would have had to take out of your pocket or, scrape together to fix up the house to the kind of the standard that you were looking for, we can just funnel everything into your loan proceeds. So you're not actually paying out of pocket for it.
I know someone who that would have been exactly what they needed.
Yeah, no, it's like heaven sent whenever I tell someone that.
Yeah, which is wild because now something went wrong, but then they put a bunch of their money into it, and now they're kind of screwed.
Exactly. I definitely wouldn't recommend, unless you have the cash, just throwing all your own cash into the deal. A lot, especially with kind of the economy and a downturn right now, cash is king. So people should be sitting on their cash, using it as an emergency fund in case, job changes happen or really anything happens.
Well, that's kind of what happened. Job changed, something went wrong, and now he's just like, half of this is done, and it's not all, and it's like, I feel so bad.
Exactly. And the best part about, it's called the home style renovation loan. You have actually 12 months to complete the renovation. So it's not something you have to kind of rush and do. You can kind of take your time doing it and you don't pay out of pocket for the rehab cost.
That's, well, that's good for me to know when I buy a home.
Yeah, no, it's good for everyone to know.
Yeah, that's killer. So can you kind of walk me through, because I've never bought a home. I'm still really new to this whole idea and of like the loan process. How does that work?
Sure. No. So I'd say there's two kind of buckets people fall in. There's a pre-qualification stage or a pre-approval stage. So those terms are typically used interchangeably, in the industry, but I would say they're two distinctively different things, and, both have their spot in the approval process. So if you're someone who's 6 to 12 months out, of the home buying, but you're kind of looking and you kind of want to get an idea of what you can afford, you're in the pre-qualification stage. That's simply a phone call with a lender like myself. I'm going to ask you just verbally kind of what's your income like? Can you give me a ballpark of where your credit score is, and how much do you have saved that you could put towards the down payment and the closing cost? And then from there, I can kind of give you a ballpark idea of what your purchasing power is, just so, as you're looking and you find something, or you're just kind of getting acclimated, or again, a lot of people will ask me these questions 12 months out just so they know what they're in for. I would always recommend, if you have and you kind of know 12 months before, definitely pick up the phone, call a lender, and kind of get going with the pre-qualification. Now, pre-approval, on the other hand, if you're someone who is within, I would say, 3 to 4 months of looking to purchase, then you definitely want to get pre-approved. So that's pretty much the same process. The only difference is now we're actually doing a hard inquiry on your credit. You're putting in an application, and we're actually going to verify all of your income and assets and things like that, get you underwritten, and get you fully pre-approved so that you can actually go out there and start shopping. And when you actually find something you want to put an offer in, you can pull the trigger.
Do you suggest to people to come to you before? Like, I feel like a lot of people's thought with it is to go to a real estate agent first. Do you think like coming straight to you or someone like you is the ticket?
I would say, me personally, I would consider myself a knower. I want to know what the numbers are. I want to prepare myself financially in order to make it such a smooth process, but not everyone's like me.
Yeah.
I would consider myself a knower. So if you're a knower out there and you're very much so focused on the numbers and the economics of it, probably best suits you to go talk to a lender first. If you're someone who's a feeler and, you really just don't want to get too heavily into things, you might be a little bit squeamish on just kind of sharing your information with someone that you don't quite know as well, then a lot of those people end up just kind of speaking with a realtor that they kind of have great rapport with first, and then that realtor will refer you out to their preferred lender.
Yeah.
So again, it's a age-old question, but I wouldn't say there's no one answer for that. A lot of people start out with the realtor, a lot of people start out with the lender, but either way, if you could find a quality lender or a quality realtor, I'm sure they both have someone they can refer you out to.
That they really trust.
Right.
That makes sense. How do you think the industry has evolved over the last couple of years, especially with the pandemic and now kind of returning back to normal times? Can you give me some insight into that?
Yeah, no. So, the pandemic, I'm sure everyone knows, it brought historically low interest rates. So that pre-approval discussion wasn't necessarily focused on interest rates as much as it is now. When you're getting 3 and 4, and some people even had 2%, high 2% interest rates, that really isn't the main topic of discussion. I think it went from rates being so low that there was so much demand where it was just kind of speed. How fast can you guys get me pre-approved? How fast can I get an offer accepted? And now as interest rates, are at 6.5% range, the conversation and pretty much all my pre-approval discovery calls are solely centered around how can I get a lower interest rate? So, that's something that I think every lender is kind of catching some flack on. So I always tell buyers, there's a lot of different ways you can get a lower interest rate. There's temporary buy downs, which is kind of the biggest thing right now. I would say 9 out of every 10 of my buyers is some way or form getting a temporary buy down using a seller credit. So a lot of people are reading into the news, reading into the media, the interest rates are so high, affordability is down, and it is down, but there are ways around it. And you can use a seller credit for a temporary buy down. So a lot of my buyers, if interest rates for that week when they go under contract and we're locking them is at 7.5%, they're closing their loan at maybe a 6.5% or a 5.5% interest rate using a 2-1 buy down or a 1-0 buy down in some fashion, and they're doing that all not out of their pocket.
What is a buy down? Like, what does that refer to?
Yeah, so that's pretty much, it's called a discount point. So it's 1-2 percentage points that you're buying below market interest rates. So for instance, on what's called a 2-1 buy down, if interest rates are at 7.5%, you're going to be 2 full percentage points lower in year 1. So 2, 1, and then the buy down will be 1% lower in year 2, and then back year 3 through 30, you're going to be back at that 7.5% interest rate. So you'll be 5.5 year 1, year 2 6.5, year 3 through 30 back to the 7.5% interest rate. But the whole goal there is we kind of are expecting rates to be kind of declining here in the next 6, 12, or 18 months. So the goal is to refinance you before you get back to that 7.5% interest rate. And we're doing that all without you having to pull any money out of your pocket to buy down your interest rate.
Okay. Wow. That's really good information. I had no idea. Yeah. And that's like not something an average person is ever going to really know.
Absolutely isn't. So I always tell people, if you're looking to buy and you think that you can't afford it or you think interest rates are too high, just have the conversation, because I'm coaching people on not having to actually get those market interest rates.
Yeah. Or what is something that commonly is said to you that like is a misconception in as far as like what it means to like get started?
I think some people don't know it's absolutely free to get pre-approved.
Yeah.
We can pre-qualify you. We don't even have to pull credit to do that. We could pre-approve you, and the worst thing that's going to happen is we do a hard inquiry on your credit, which rarely negatively impacts you by more than 5 points.
Okay.
So it doesn't hurt. It doesn't matter where you are in the buying process. You could be 2 years out. It doesn't hurt to see what you can afford and have that conversation started with the lender.
I feel like too, though, like going kind of back to your idea of the interest rates, I feel like for a long time they were way higher than even where they're at now. Is that a true thought?
It's the recency effect. So interest rates, they are historically high, but we're just coming from historically low interest rates, which is why people think that they're so devastatingly high. Truth of the matter is interest rates have fluctuated from the 5 and 6% range all throughout the 2000s. So coming off of 3 and 4% rates, of course, people are going to think that 6.5 and 7.5% is high.
Yeah. But it's like, and if you look at the totality of interest rates, it's just like, that's part of it.
Yeah, that's exactly it.
Yeah. Were they even, so they were the lowest ever, like in the pandemic?
Yeah.
So that makes so much sense. Where it's
artificially low, exactly.
Yeah, artificially low, yeah. No wonder they were, no wonder people, like you said, no wonder people are a little tripped out.
Exactly. Yeah, I think a lot of my conversations that I'm having, I would say if I have 10 pre-approval calls in a week, 3 of those buyers are just like, well, can you go in the back and grab me that 3.5% rate? I'm like, well, that's not how that works. I don't actually control interest rates, so I'm going to do my best to get you something that works for you. But you gotta bear with me here.
It's like funny you should say that. I can't do that.
Yeah, no, exactly.
Well, okay. So if I'm a new buyer, and what are some strategies that I could do to kind of help me build a stronger credit or maintain the credit I do have? What are some strategies you suggest?
Sure. Yeah. So for every buyer, you need to be thinking about 3 things when you're going to buy a home, and the 3 things that go into actually getting approved for a mortgage. That's cash. So that's the money you have on hand. You can be gifted by a family member. Some money you have on hand to cover your down payment, which can be as little as 3% on a conventional loan or 3.5% on an FHA loan. So you have your cash that covers your down payment and your closing costs. And then you have your income and employment. So typically we'll need a 2-year work history. Now, if you're newly graduated from college or something like that, then as long as you have a job lined up that's salary within 6 months, we can still get you pre-approved there. So we have cash, we have income and employment, and then we have credit. So those are the 3 things you need to be thinking about. Credit score, we need a minimum of 580 to get you pre-approved and approved on a FHA loan, and then about a 640 for a conventional loan. So things you can kind of do to keep your credit great or improve it if it's not so great. I would say the 2 things that have the most negative impact on your credit would be late payments.
Yeah.
So I'm telling buyers, and I have conversations all the time with someone who might be low 500s, but I'm not going to tell them we can't get you pre-approved. We just can't do it now. So we'll put a plan together to get them pre-approved. And typically the first thing I'm going to tell them is set up auto payments. You should set up auto payments to pay the most minimal amount needed in order to kind of get you to the next month.
Yeah.
So on all my credit cards, everything's on auto pay.
Yeah.
I recommend paying them off completely every month. That's just, good financial practice. But if you can't do that, figure out what that minimum payment is and set that up for your auto pay. And then 2 is credit utilization. So for every $100 you have available from your credit, you need to spend 30% of that. So for every $100, you should spend no more than $30 of that.
Damn. I didn't know that either. That's
And
good.
again, if you can't really adjust your spending, what you could be able to do is just give your credit card company a call and see if they can increase your limit. So if they increase your limit and you're spending the same amount, your credit utilization shrinks.
Yeah, that's a good idea. I might actually have to do that.
It's a good tip. Most people don't realize how simple it really is.
Yeah, the one thing I'm so happy I did, or is I did utilize setting up the minimum payment initially. So I've never, I've had it since I was like 18. So like once I got a better paying job, I was like, oh shit, my credit's actually
Right.
really good.
It's out of sight, out of mind. I'm sure some people have the money and they do pay off their credit cards, but if you miss it, then it dings your credit. So I always just say just automate your life.
Yeah, but yeah, and as far as the utilization, that's a good tip. I think I might actually really do that. I would love to. My biggest thing is because I've always kind of maintained in the 700s, and I feel like that's pretty good.
No, yeah, I would say 740 plus is a great score.
That's good where you want to be.
Right.
Cool. So what's the difference though? Okay, so you were saying that an FHA loan is 3% and then conventional is 3.5, or do I have that backwards?
You have that backwards. FHA 3.5% down, conventional is 3.
Why is that? Especially if like the FHA is for like first time home buyers.
I think that's just regulation at the end
It's
of
just
the day.
the way she goes.
It's the way she goes.
Okay. Well, I mean that makes sense. How does my credit history, how does that affect the different types of loans that I might be actually eligible for?
Sure. So I think I kind of alluded to this a bit ago, but FHA loans are typically geared toward people with a little bit lower credit score. So you can get approved for
580?
FHA with 580 as
Yeah.
opposed to conventional is 640.
Okay, yeah, okay. That's what you mean by that. In your experience, how important is it to like get some education on being financially literate for like the average person? Are there some resources that you recommend?
Yeah, no, I'd say that every person should have a good financial advisor in their corner. Now, again, if you can't afford one, then YouTube's a good resource, honestly.
Yeah.
To learn some things.
University of YouTube.
Exactly. Just learn some basic finance just to kind of keep you going. Again, for education on kind of home buying, mortgages, and things like that. A good lender will start that conversation with you no matter what stage you're in the buying process. So, if someone calls me tomorrow and says they're 3 years out, I'm still going to treat them the same way as someone called me and told me that they want to buy a home tomorrow. So get your ducks in a row, find a good resources. Realtor can kind of coach you up on that, a lender, a financial advisor, some accountants even.
Can you, I don't know if you can't remember one, but this would be kind of cool to like find. Do you have like a success story of someone that you saw actually like put in the work and be able to like raise their credit score? Because at least I know for myself, I feel like if it ever goes down to a point, I feel like it would be like such a rut that I don't think I could ever really climb out of.
Sure. No, I've had clients that were as low as, a 450 credit score. I've had clients that came to me and they didn't even have a credit score, and I put them on a quick plan to where they were, mid 700 credit score within 4 or 5 months. So you can get a secured credit card with Capital One, for instance, and it's tied to your debit account, so you're never actually spending money you don't have. So it's just an extension of your debit card, and within a few months, you can start building a credit score.
Oh, that's awesome. Yeah, that's also another cool thing. I mean, I got a Capital One when I first started, and it was just like, I guess
Pretty simple. You'll have a credit
Yeah.
score within 2 months. You can build it to mid 700s within a few months after that.
Yeah. One thing that I don't know if this is even applicable, but I got really excited because I got a Southwest card, and then once
Got some free trips.
Yeah, I was like out of nowhere. I was like, man, I've got a ton of points. I was like, where did this come from?
Yeah, I personally only use credit cards, but I pay my entire balance off every month and use all the incentives that come with it.
That's, I think, another pro tip that maybe not enough people think, like, use the points. Like,
Right.
you're
Credit
getting,
cards aren't bad. People's habits are bad.
Totally.
So if you are someone who only uses the debit card and only pays for things in cash and you have good credit, go and get a credit card that kind of fits your lifestyle. If you're someone who likes to travel, go get something with travel rewards, pay it off in full every month, and it's
They'll
all
love
upside
you.
from there. You're
Yeah.
going to get all the points and travel incentives.
I can't tell you how many vacations I've been on myself where we didn't pay for a plane ticket.
Yeah, no, they're great in doing that.
Yeah, I was like, ooh, look at me. Who'd have thought? What are some of the lesser known concepts that borrowers should be thinking about when it comes to loans and like really making, I don't know, really making you a well-rounded borrower, I guess, if that's the right way to say it.
Great. So when it comes to home loans, I would say one misconception is that you need to put 20% down when you're purchasing a home. First-time home buyers, you don't need to do that. You can put as little down as 3 or 3.5%. Something I would also think that a lot of people will do. If I could kind of go back to when I first graduated college, I think for my first 2 or 3 years out of college, I should have teamed up with a few buddies, pulled our money together, and bought a duplex or a triplex. We all live in one unit and rent the other 2 out.
Oh, yeah.
And then you're cash flowing at best, or at worst, you're out of pocket maybe $100 or $200 a month, and you're living in a great place.
That I wish I would have done. Like, been smart enough to like, why don't we all just try to get something, and then
you turn around, 5 years passes and you built up all its equity.
Yeah.
And you could either, sell it and kind of get your money back plus some profit.
Yeah.
Or you could use it as kind of your own small little personal piggy bank, take some money out, and then go buy some more properties.
Exactly. And that's just like the type of education that not enough people have.
Most people don't have.
Yeah. Like that is such high level way of thinking about just how you can leverage your money to work for you rather than...
Right, and you could rinse and repeat and do that every 12 to 24 months, and you turn around 8-10 years later in your 30s and you've just built $1 million real estate portfolio.
Yeah, that's cool. Well, okay, I want to kind of pivot now because this is really what we do best and what we're like most passionate about is social media. So over the last couple of years, I mean, I've seen you do your thing for a while, and that's ultimately what makes me love talking to you, because you have a really good idea and strategy, and we've talked about it a lot with social media. So how do you use social media to kind of leverage getting new leads and then converting those leads into potential sales?
Sure. Yeah. So I think a lot of real estate professionals, lenders, realtors, they kind of have this, big vision that, thousands of people that they don't know are going to reach out to them and want them to, transact with them. Best case, that does happen for a lot of people. But I think at the very smallest level, it's a great way to stay in touch and let the people you already know, who already know, like, and trust you, know what you're doing.
Yeah.
Everyone, home ownership is something that most people strive for. You're not selling Ferraris where there's few and far between people who can buy them.
Yeah.
Everyone, typically is going to want to buy a home at some point in their life, and you need to be that person that stays top of mind. So a strategy I would just say that worked for me at the beginning, and it was pretty organic. I'm not going to be DMing you or kind of liking and commenting on your stuff if I genuinely wasn't already gravitating toward the post. But, going through every single morning, liking stories of people that you already know, swiping up, commenting, things like that, and just getting into organic conversations. I stress organic conversations because I get DMs from people all the time, and I know it's just really inorganic, and they're just looking for me to kind of give them business or do something else with them, and people can kind of read through your BS kind of pretty quickly.
Yeah, that's a really good point. It took me a while to kind of understand, to take off the sales part of it and just be like, I just want to give you a little love on what you're doing.
Right.
That I think again goes to your point of being more organic. It's just I feel like I get a different response. It's like, oh, I love what you're doing. Keep it up. And then maybe a couple weeks later I'll be say something again, but it's just that little touch of
right. Yeah, you should be depositing at least a few times before you ask for that withdrawal.
Yeah, totally. I think the best thing about this podcast is that it's allowed me to kind of give hey, I'm going to give you a platform to get content. So that's one of the reasons why I love this so much is I spoke with this woman today, and I hadn't really even met her besides hey, hitting her up, hey, we got a podcast,
right.
Come on.
Exactly.
And now I've built a much deeper relationship with her, and now she knows me and Memo.
Exactly. You should give at least 2 to 3 times before you ask someone for anything. And I think that's kind of a reputation that you build, that you're looking to add value before you take it.
Yeah, and that I think that too is as an entrepreneur, as a salesperson, I think that takes a second to kind of understand.
Mm-hmm.
Like you do it enough times to where you get that kind of cold shoulder to where you're like, what am I doing wrong?
Yeah, no one wants to. Everyone hates the guy with the commission breath. That's always just looking to make something transactional, as opposed to the long-minded kind of person. Whether you're a lender, a financial advisor, or a realtor, I think everyone can appreciate someone that's got a more long-term vision of things and doesn't need to get to business right away with you.
Totally. And again, yeah, that's been like one of the biggest come to Jesus moments. It's like you gotta just say
just be
hey,
cool. Just be cool about it.
Yeah, just be cool, Bob.
Yeah,
that's it. Just like hang out, and then things will organically come to fruition. And if they want to work with you, they at least, on the very least, know your vibe.
Exactly. And I think that's the thing. If you're being organic on camera, or videos that you do, or the pictures you post, or the stories you post, the people that kind of have some commonalities with you, they're going to gravitate towards you. I would just say stay genuine, because the people that want to do business with you and like you and your personality, those are the people that are going to respond to your posts and things like that.
Yeah. What do you think too? Where do you kind of see things kind of morphing in social media? Because right now, right, the reels have been really hot, but I almost feel like that isn't a trend that's going to stay forever.
Yeah, no. I've been doing a lot of educational reels for my business on social media. But as we see a lot more people doing it, I think it's going to go towards the person that can still do that, still offer a lot of value and, educate and somewhat entertain people, but also the person who could actually build a brand around what makes them them and kind of their values as well. Because at the end of the day, people are only going to do business with people that they like and trust. And who are you going to like and trust more than the guy or the girl who's kind of demonstrating that they have the same values and stand on kind of the same principles that you do?
Totally. Yeah, I think the idea of like just bringing your authentic self in the 360 approach, not just as like I'm this educator business person,
right,
which Memo and I think that is the bulk of what you should be, an educator, but like having that touch of like who you are. So
yeah, because there's 4 loan officers talking about buy downs, and I'm one of them.
Yeah.
In my competition, also doing that as well. But I think if someone's going to pick to work with someone, they're going to pick the person that their values and their hobbies and everything else aligns with kind of what they do in life as well.
Totally. That is, yeah, I couldn't agree more with you. I think that's exactly how all of this is going to play out.
Right.
And I guess I always think about this too, about the people that aren't even doing anything. I feel like at some point those people are going to be, their brand awareness and all that, like they're going to be so far behind as far as just even being that like people understanding who they are. Mm-hmm. They're going to just be so far behind the 8 ball. I always feel bad because like I'm glad you're doing it.
Yeah, no, I still think you can build a great business not using social media, but I think with social media, you could probably do it in half the time just because it's a free platform. Now, granted, you could literally post up with the camera with your iPhone. That's what I was doing at the beginning, which was free for me to do. Try to edit it myself, throw it online, or you can get really fancy with videographers and do some really polished stuff. But at the end of the day, it's on a free platform that's giving you so much kind of reach to a lot of people that you could either be doing business with directly or be referral partners or anything like that. So I think you could build a great business, but you can do it in half the time with social media.
Right. Yeah, I just feel bad for the people that are heavily regulated. I'm like,
right.
That sucks. Mm-hmm.
What
do you get leads from social media?
Yeah, no, I close fair amount of business from people in my sphere who just maybe someone I hadn't talked to since college or high school.
Yeah.
Didn't know I was a lender until I started posting.
Yeah.
And we know each other. They've already kind of liked me. They've already, we built that trust years ago.
Yeah.
So then they're reaching out. I have had some people that I didn't know at all that have reached out and we've done mortgages for. So yeah, to answer your question, you can get business from social media. And I think even for a lender, which is, people were typically second in the process, people typically reach out to a realtor first and realtor refer out a lender. I'm still kind of getting business, and I'm still with social media. It's allowed me to kind of be that first step. Yeah. And I think that could be even like threefold if you're a realtor, because people start by reaching out to a realtor first. So if you're constantly on their feed, providing value, showing them cool stuff, and just kind of showcasing your expertise and your personality, sky's probably the limit for you.
Yeah, you're really in the driver's seat with
Yeah.
all that. Yeah, the leveraging, what you can do with it, and just the reach is what makes it so crazy to me. Did you have a strategy initially when you set out on social media? Were there like couple principles you wanted to do?
No, really. I just wanted to start posting and getting my name out there. And then as I kind of started posting and, people started liking it and kind of commenting and engaging with it.
Yeah.
And then I realized, okay, maybe some tweaks here, some tweaks there. And then you kind of, I don't think anyone has a perfect plan when they start out. I think you just have to start.
Yeah. Oh, of course. You just have to start.
Right.
But some people are like, I talked to someone and they were like, I just want people to know who I am, that I'm in real estate, or I'm in, and I do this professionally all the time. And I think without maybe even you thinking about it, that's like essentially where you started.
Right. No, that was literally it. It was just for exposure. But I think really my strategy at first was just to let everyone who already knows, likes, and trusts me that I've known throughout my life, let them know that I'm doing this and that I'm great at doing what I'm doing. So social media was a great tool for that.
Yeah. The people, as you continue to do more and more content, that becomes easy to understand that you do know what you're doing.
Right.
Because there's, it's like you hear someone enough talk about it, you're like, oh shit, they really do get it.
Exactly. And there's people that are probably watching my videos that are ready to buy and they'll reach out tomorrow, or someone I've had reached out and they're like, oh, I saw your video from a year ago and I saved it and I'm finally ready to buy. Can we get a pre-approval?
That's awesome. Well, that just shows you that great content, great meats and potato of your content lives on forever.
Right.
And these are your foot soldiers, as Memo and I call it. Those are like the guys that are going to go to battle for you when you're sleeping, when you're not around. So that, I've just always thought that, and am a real believer that like great content will make you money.
Right. No, it really will. Yeah.
And keep, not as well. It just makes you look like that local expert, which I think is, again, so important. Do you see any play for you moving towards YouTube and like trying to incorporate that into your pipeline of content?
I do. I think at some point that's something that I will be kind of solely focused on, is doing kind of long form content, and then you can kind of repurpose that into short form. So kind of getting a double-edged sword there.
Yeah, and that what's cool is with YouTube is that as your most viewed videos will keep getting pushed to new people.
Right.
So those can continue to get out there and be shown. And so if you have something on your feed on Instagram or these other platforms, unless you pin it to the top, it's going.
Oh yeah,
it's going to get lost in the sauce.
I've had a video I posted maybe a year ago that when I think the first week of me posting it, I only had a couple hundred views on it, and then I get an alert from Instagram maybe 6 months later that this video just cracked 5,000 views. So
Sick.
It's just constantly getting pushed through the algorithm. And you're getting all this free exposure, and you could be sleeping and people are watching your videos and learning more and learning about what you're doing.
Yeah, that's amazing. That's what just makes it so dang powerful.
Yep.
Yeah. It's easy. It's easy money. You just got to be consistency. You got to have consistency because, again, when you're consistent with content, it builds trust amongst the other people, your followers, your new people. Like when they see that you continuously do it at a level that is top notch or polished, which is a whole nother conversation that you have to start doing more polished content now, because we always say that like it feels a little scammy when it's like your phone. And I like remember a couple years ago, it was like the guy by his Ferrari or whatever, like with just his phone. Like now it feels like that feels so scammy to me. So.
Yeah, and I think even if you are paying to kind of polish up your content, if something can get to tens of thousands of views, hundreds of thousands of views, in some cases, I know loan officers with videos out there that had millions of views. Prior to social media, to get millions of views on your advertisement, you had to spend lots of money to do that.
Yeah.
Instagram is a free platform, and at most you might have spent $100 to get that video edited and polished up. So the ROI on that compared to old practices of advertisement and marketing, you can't even compare it.
I always think this is really interesting. You're going to pay for leads. You might as well pay for them. Like, you might as well pay someone to, like, help you make the content.
Right.
Because it's coming out of somewhere.
Exactly. Yeah.
Yeah. Might as well do that. Tyler, great talking to you, brother.
You as well.
Yeah, thanks for being here. We do this last little bit to give you a shameless plug. You can talk to that camera, tell everybody who you are, where you're at, and why they should be working with you.
Yeah, no, I'm Tyler Cornelius. I am a loan officer with Guaranteed Rate here based in Chicago, Illinois. And why would you work with me? I'm someone who takes on everybody, and no matter if you're the client who's buying that $1 million home and needs a mortgage, or the client who's buying that $250,000 home, I'm going to treat you the same, and I'm going to get you educated and hold your hand and just make sure it's a great overall experience for you.
Thank you guys for watching this last episode of the Reup Podcast. Tyler, again, thank you so much for being here. Thank you, Haven Home Stager. Without you, none of this is possible. You guys are the best, and we appreciate you. Peace.